Hey everyone, thanks for joining us back here at MarketBeat. Today we're going to talk about a stock that most everyone would know, including Warren Buffett. Kraft Heinz is a recovery story that simply keeps getting better. We have MarketBeat contributor Thomas Hughes back on today, and he offers his insight on this value dividend stock and where he sees the stock headed for 2023 and beyond. Thomas, thanks for being with us today.
Thanks for having me.
All right, so you've followed Kraft Heinz for years now, and the story seems to be improving, although slowly. What's going on there?
Well, this is an epic story. I mean, Kraft and Heinz are both iconic brands that have been around for decades. Kraft itself, I mean, it was been bought and purchased and resold and merged and divested so many times. It's hard to know what the original company really is, but it's still a core of brands that has power in America and in the world. So really to understand what's going on now, you need to understand that when Kraft and Heinz were merged, the market was confused. They didn't know what the purpose of the merger was for. After the first year or two, the results weren't really panning out. That was compounded by an accounting scandal that led to a distribution cut. The stock imploded. So that when I found it, it was the deep value and high yielding play that it is today. But in that time since then, the company's been working really hard to turn itself around. It's divested itself of dead weight, non-performing assets. It's raised capital. It's shored up the balance sheet, and it's begun to reinvest in growth again. And that's got this undervalued high-yielding dividend play in a position where it can really produce some valuable returns for investors.
Thomas, you mentioned deep value and yield. Can you spend a minute talking a little bit more about that for us?
Right. Well, Kraft Heinz is a consumer staple, and the consumer staples group trades in a pretty wide range in regard to their valuation. The valuation being how expensive the stock is relative to their earnings. Kraft Heinz trades around 15 times its earnings, which is at the very low end of the range for consumer staple stocks, while the highest valued stocks like Hormel and Clorox and Lamb Weston are trading for 25 to 35 times their earnings. Now, those other companies haven't had the scandal that Kraft did. They've been more established. They haven't had the turmoil of divestitures and mergers that Kraft has. So the market's willing to pay a little bit more money for them. But over time, as Kraft Heinz improves itself, it will also earn a higher multiple, and that will be a benefit to shareholders. At the same time, Kraft is paying about 4% in yield, while those other stocks all pay 3.2% or lower. So with Kraft, you're paying less to get the stock and get a better yield. And then there's a turnaround story that should boost returns above and beyond what the consumer staples sector should be seeing over the next year or two on its own.
So it seems like the fundamentals are pretty sound for KHC, but what about the technical analysis? What kind of story can be found from the charts here?
There's the merger, the fall from grace, the bottom, and then now we're up here in this consolidation zone. This zone here is the company proving that it can execute on the plans and the dreams that it has. And what I think right now is that the stock is just going to stay in this consolidation zone. Right now it's drifting upwards. Over the next couple of quarters, we're probably going to get some reports that really get the market excited, and we may see it break above this $44, $45 line into the next zone. Longer term, I think that the multiple expansion could get the stock all the way back up to the $80 range. That would really be, that story would be enhanced if Kraft were able to increase its dividend. Kraft hasn't increased its dividend for many years because of the turnaround story, but the consumer staples sector is well known to be a dividend growing sector. So I don't count Kraft out for raising the dividend. And I think that when and if it happens, it will be a real big catalyst for the stock.
So looking forward here, Thomas, what kind of catalysts are in store for Kraft Heinz?
Well, the biggest catalyst is just executing on the plan and producing results. That's what the market needs to see. Anything else will just be icing on the cake. But again, if the company can produce the results the way that it's planning to do, then the dividend increase should naturally come. And the two things together should get the stock trading back up in the $80 to $90 range.
Thanks, Thomas. That's all we have for today. Thanks to everyone that tuned in. If you enjoyed this video, please give it a thumbs up down below. Leave us a comment if you'd like to start a conversation with us. And don't forget to subscribe to our YouTube channel so you can stay on top of the latest stock market news. We'll deliver it to you right here each week. And as always, you can head over to MarketBeat.com to sign up for our newsletter, as well as access additional stock market news and tools. Thanks again for joining me, Thomas. We'll see everyone next time.
Thank you. Have a good week.